Hi everybody, Jeff Yastine here. Welcome back to another edition of Wealth Press TV. And as always, make sure to like and subscribe to us. Follow us on social media. And let me introduce my guest this week. It's Adam Sarhan, the one, the only. Adam, welcome to Wealth Press TV.
Thanks, Jeff. Thank you for having me.
So let's get started talking about the chip sector, semiconductor stocks. It's a very important part of the economy for both the United States and global economies, as well as for the stock market, which is what all of us pay most attention to. Where are we in all this?
One of the most important areas in the markets for the last 20 plus years are semiconductor stocks. An ETF that tracks semiconductors, ticker symbols SMH. It's a popular one. It's liquid. People can just take a look at it to see how the semiconductors as a group are performing. The reason why semiconductors are so important is because tech stocks are so important. I know this is not rocket science, so bear with me here with the logic. And if you look at the returns on the NASDAQ 100 versus the Russell versus the S&P versus the Dow versus the mid-caps, what have you, the NASDAQ 100, specifically the 100 biggest stocks in the NASDAQ, tend to outperform almost every single year. So when you drill down deeper, a big portion of the tech stocks come from semiconductors. So what I like to look for is this of a tell, if you will, for the market is to gauge the health of the semiconductor stocks. Now, it's not 100% perfect. Remember, nothing's 100% perfect on Wall Street, but it tends to serve as a very good proxy for the broader market. Not always, but most of the time. That being said, there's lots of ways to invest in semiconductor stocks. Most recently in Alpha Trades, we had Micron, which was a big semiconductor stock. We walked out with a very nice gain there. But it happens many, many, many times where you could see stocks that are moving, that are trending nicely, and then the market follows. Remember, the market, the major indices by market, I mean NASDAQ 100, Dow, S&P 500, what have you, are indexes that are made up of individual stocks. So if you see that the semiconductor stocks are doing very well, that tends to bode well for tech stocks and for the broader market in general.
Adam, one thing I know about the chip sector is that it usually goes through these upgrade cycles where there's a lot of demand and then not as much demand, and then the chip makers upgrade and add more processing power, and then there's another surge. Where are we in that process?
That's a really good point. So where we are in the cycle, to directly answer your question, is we're in a demand-based cycle, part of the cycle. People are buying chips. The answer is why. I mean, first, let's ask why, and then we'll answer it. The answer is that we're in a situation where the global economy is moving more towards a tech-based economy faster than it ever has in the history of the world. So why is there a lot of demand? It's because economic activity is largely derived and continue to be derived more and more from tech, which the basis of tech are these chips, the semiconductors. So as you mentioned, Tesla's a car company. Wait a minute. Without any semiconductors, the car doesn't run.
Right.
So it's a tech company as well. And if you look at the history of the global economy, let's step back for a second. Hundreds and hundreds of years ago, agriculture was the primary source of wealth in the global economy, right? You had big fields, big plantations, whatever the case was, and people would go and, get the corn or the cotton or whatever it was. And then that was the farmers, the agriculture was a bulk of the economy. And then we had the Industrial Revolution 100 plus years ago, and it was a paradigm shift in the global economy. It went from an agricultural world to the centers of wealth became in cities, and it became manufacturing, and that dominated for most of the 1900s. And then after World War II in the 1950s until the early 2000s, you had the service-based industry just explode, and money shifted from manual labor, which was they quickly realized the economy that can be outsourced, to services, and services just exploded. And then we had the dot-com and the age of information, if you will, which we're currently in now from the 80s and 90s, and it really took off in 2000s and all the way up until where we are today. And there is the world, the global economy functions and operates well. The powers of wealth, the largest companies in the world are largely tech companies. So if you look at Apple, they don't manufacture phones. They outsource it, but they design the phones, right? Google, one of the biggest companies in the world. Facebook, I can go on and on. Microsoft, you've got these juggernauts, these economic powerhouses that are largely tech stocks, and their businesses cannot function without semiconductors. So the reason why, Jeff, that cyclical trend of boom and bust from the early parts of the semiconductor days is now shifted, and you don't see those big busts is because more and more industries in the global economy are migrating or moving into that tech space, or some portion of their business is moving into tech, and that drives fuels the demand for these semiconductors.
Adam, what would you say is the premier chip company these days in the stock market?
Basically, every computer runs on Intel or AMD, right? If you want to buy a new computer, you can get an Intel chip or you can get an AMD chip. So the demand is there. They're crunking along. They're growing so far. That's fine. But the real shift, the powerhouses now, like you mentioned, NVIDIA is just dominated. They're into gaming. They're into screens. The high-end laptops all have them. The high-end computers have NVIDIA chips. Bitcoin, which is really big. You can mine Bitcoin. They're very big, NVIDIA, with that as well. So they've been able to evolve faster than some of these bigger powerhouses. And NVIDIA stock is doing extremely well. It's building a new base and it's about to break out again, so on and so forth. I've got, one of the things that we do is we look at the kingmakers and we look at where the market, the big players in the market buy stock and where they're aggressively moving. And NVIDIA is being accumulated very, very well by the big kingmakers in the market. Micron, MU, is another stock. It was in the Alpha Trades portfolio, locked in a very nice gain there. And look at Micron's move. Since November, the stock went from 42 to 83. And that's not Aunt Mary, and that's not Aunt Mary and Uncle Joe doing the buying there. That's the big institutions jumping in with 2, 3, 4, 5 fists and buying aggressively. That's another really good in chip stock. Then you've got LRCX, which is a good Lam Research. It's a very good chip stock as well. Big leading stock. You've had a lot of money just buy and plow into this. They're big on semiconductors as well, and it's a very, very strong acting stock. You've got a few other ones that I can mention too. KLAC is a ticker. KLA Corp is the name of the company. And the stock has had a huge move there as well, from 130 to about 300 since September. And these stocks are trading at or near 52-week highs, so they're not quote-unquote cheap stocks anymore. But they were very cheap just a few months ago, considering they've had huge moves. And NVIDIA had a huge move after COVID, moved sideways for many, many months, and now it's getting going again. So really, whenever I invest with these chip stocks or these semiconductor stocks or any stock for that matter, I always want to understand high level, what do they do? But behind the scenes, is there a second level or a deeper level that I can dive deeper, do some more research, and ask myself, okay, how are they going to grow from here? If once I understand that answer, then all of a sudden I can reverse engineer it and say, okay, there's a tremendous amount of growth potential for NVIDIA. Stocks looks at a good risk-reward ratio, so on and so forth. But I can see the kingmakers are buying it, and they're buying it very aggressively. Last time that happened, look what happened to Micron, look what happened to KLAC, look what happened to LRCX, and it could happen now once again with NVIDIA. It happened last year with NVIDIA, and the stock soared. So whenever I see these kingmakers buying, I like to be able to align myself with what they're doing. And more importantly, Jeff, when you look at the semiconductors, ask yourself, am I buying a company that's on the forefront of growth and innovating like NVIDIA or KLAC or Lam Research or Micron, or am I buying a large Intel type of a company where they haven't really innovated in a long time? I went to go buy a new computer a few months ago, and I want to buy the best of the best. And I think Intel i9 is now the top line of their basic products. I mean, the last time I bought a computer was a few years ago, and it was an i7. So I want to buy the best computer. It's not a money thing here. It's just, hey, what is the best thing to buy? And I'm being told i9 is the best thing. Okay. Where's the excitement there, right?
Right. But you mentioned Intel, and Intel has been an underperformer as a chip company for years, and it got too big and has not been able to really keep up with the latest innovations and get the best profit growth, for the company. So what do you think is likely to happen to Intel? I've often wondered if it may at some point be taken over and perhaps broken up to get those innovative designs, which may well be down there somewhere inside one of their buildings with a very smart, innovative chip designer who just can't get his products listened to, but can't get his bosses to listen to him so he can get these hot new chip designs to market.
They did it a few years ago with eBay and PayPal. PayPal used to be a part of eBay, and Icon and a few other big activist investors went in there and said, okay, separate PayPal, and eBay is now a freestanding company and publicly traded, and PayPal is a freestanding publicly traded company. And it worked out very, very well. Sometimes these spin-outs work very well, and sometimes they don't. And when they do work, you see a tremendous amount of wealth that can be created. Is there an argument for Intel to be remade, if you will, or a 2.0 version? Yeah, absolutely. There's an argument to be made. People pay up for innovation, right? On the eBay PayPal point, PayPal's market cap right now is 328 billion. eBay's market cap is 43 billion. Think about that for a second. I'll repeat that. PayPal's market cap is 328 billion. 328 billion. eBay's 43 billion. So PayPal used to be inside of eBay. And at the time, eBay wasn't worth 320 billion. So there's a tremendous amount of value that can be created, Jeff, when you go in there, as you know, and you take out you carve up the company, and do what Richard Gere did in the movie Pretty Woman, right? And you create value. That's why these people get paid. So that's the activist investor. The private equity guy is a mix of what Richard Gere did back in that movie, where you go into a company, you take it private, fix it up, and cut out all the fat, and then IPO it again. And there's a demand there to do that as well. So there's an argument on both sides. Do you take Intel, do you keep it as is, it's stodgy and hasn't really taken off the 2000 highs yet, or do you break it up or take it private? I would make the argument you should do one of the latter. Your point of breaking it up and or taking it public or private, and refixing it. It's a really big company, 240 billion. So it's tough to take Intel private, but there are buyers out there that have that kind of appetite.
Yeah, for sure.
Yeah, in order for Intel to grow, look at the earnings growth and revenue growth. In the last 2 quarters, earnings were down. They were flat last quarter and then down 22% in the third quarter of 2020 compared to the third quarter of 19. In revenue was down 1% last quarter and down 4% in the prior quarter. That's not attractive.
Not a recipe for success.
Right. Now, meanwhile, look at NVIDIA. In the last 2 quarters, earnings were up 63% in the fourth quarter and 76% in the third quarter, respectively. And then revenue, that was earnings. Revenue was up 57% and then 50%. So you've got one company which is growing aggressively, double-digit earnings growth and revenue growth. You've got another company which is flat and negative from sales and revenue and earnings. So you ask yourself, which company do you want to be invested in? And that's why you see the big difference in the stock prices.
Adam, one company you haven't mentioned is Qualcomm. They make the Snapdragon processor that goes into a great many cell phones. And of course, they've been doing well because of this ongoing transition to 5G. Yeah,
surprisingly, Qualcomm has done a better job of innovating and also putting up good numbers. The last 2 quarters, Qualcomm, you've got 119% growth in Q4 versus Q4 of 19 and 86% growth in the third quarter. And then you had 62%, that's earnings, and then revenue grew by 62% and then 73%. What does that mean in plain English? Qualcomm has able to adapt and adjust. 5G is very big. The Super Bowl just happened, and most of the ads were about 5G. And you go anywhere, you see ads for 5G. With the chips behind the 5G are Qualcomm. That's something attractive, right? Intel doesn't have that. If Qualcomm is able to put up these earnings growth and they can continue to put up these numbers in revenue, if you notice, by the way, the market already knows this, Qualcomm's stock price back in 2000 was 100, the high, a split adjusted high. Now you're at 146. So you're up 46% above where you were in 2000. Intel, to your point, back in 2000, the high was what, $75 and change?
Yes.
And now Intel's at 58, so 50, almost under 59. So Qualcomm has performed very, very much better than Intel. You're at new highs. Qualcomm itself is on the 5G bandwagon. It's powering the 5G movement. After 5G, you've got 6G, you've got 7G. It's just never going to stop. You're going to have competition in there, whether it's Apple making their own chips or some other big company making their own chips. But for now, both these companies, Qualcomm is a much better performing stock than Intel.
Adam, do you think the chip sector is so big these days and so dominated by the likes of Intel and the others that there's no room for a small company anymore, much like NVIDIA was 10 and 15 years ago and is able to grow into the huge company it is now? Is there no room for a new NVIDIA?
There is room is my answer. There's always room. Highmax Technologies, ticker symbol HIMX, full disclosure, that's a position in the portfolios. The Kingmakers have been buying this in droves, and it was featured in a few of my reports, my newsletters, at $7.50. The stock now is at $15, and it was featured, in December. I'll give you the exact day here. It was on December 30th. And now we're February 8th. So you're in a situation where there's always room for growth. It's a Taiwanese company. They make display and drivers for thin film transit and flat panel or LCD displays, including TVs and PCs. So it's a different world. Lower price stock, which I don't normally touch, but it did catch my attention because it has the earning growth. Earnings were up 900% last quarter, 188% the quarter before, triple digits over the last 4 quarters. And revenue rose by 58% and then 46%. So you have huge growth from the earnings, huge growth from revenue. It broke out of a nice base. Technically, check every box. Now, if you look at TSM, which is Taiwan Semiconductor, TSM is the ticker, they're much bigger. They're a $132 company. Earnings have been growing double digits there as well. Revenue has been growing double digits there as well. The stock is doing very, very, it's doing fantastic. And it continues going up. I much rather invest in the best of the best or the leaders in the group. So I much rather look at NVIDIA that's growing, a Taiwan Semiconductor that's growing, LRCX or KLAC, whatever, any of those kind of big established companies, but they still have room to grow. If you look at the market cap for TSM, the market cap right now is $685 billion. It's a juggernaut. I mean, it's huge, $685 billion. The market cap for NVIDIA is $353 billion. Half of what TSM is, right? So right. NVIDIA is an established company. I'm going to put that in air quotes, but it could still double again and still be half the size of TSM. So you've got to really pick your spots. You have to be able to separate the strength, leaders from the laggards, and you also have to understand what is the moat, like Warren Buffett likes to talk about, the moat around the business. What is the unique value proposition that company has that other companies don't have?
For years, I've been reading how chip makers are basically pushing up against Moore's law, but they keep finding ways to keep extending it further and further. Where are we in that? Or will you and I still have this conversation 10 years from now, simply for the same reasons that they just keep finding new ways to innovate?
Moore's law, for those that people aren't familiar, it just basically says eventually we're going to hit a wall and these guys can't continue to grow as fast as they can. Double the speed, it'll double, but eventually it'll stop. So basically, eventually you hit a wall, just to keep it in layman terms. I don't buy that argument. I mean, sure, technically you can argue and prove that it's right in theory. Sure. It hasn't happened yet. I remember, Jeff, and I'm sure you remember years ago, they used to say something called peak oil. We're going to run out of oil.
Yes.
And then all of a sudden fracking came and boom, we've got record amount of supply and so on and so forth. Oil is a physical commodity. This is different. So I'm not comparing apples to apples here, but I want to illustrate the point. Whenever everybody in the world says, oh, no, be careful of X usually doesn't happen. The Super Bowl just happened yesterday. I'm not a sports guy. I don't gamble. I don't drink for what it's worth. The Chiefs were playing the Tampa Bay Buccaneers, right? I heard from a friend the Chiefs are favored to win by X amount of whatever, points, spread, whatever the lingo is for gambling. I said right away, take the other side of the trade. He goes, what do you mean? I said, put your money. He's going to bet. Put your money on Tampa. He goes, why? I said, because the crowd's usually wrong. It's just the way the world works. I don't know what the logic is. Most people are wrong most of the time. So he goes, okay. He took the trade and he made a bunch of money. And he's called me up the other night in the Super Bowl. And he's like, hey, can't believe this happened. Right? So it doesn't. Not every single time the crowd's wrong, mind you. But we've heard these doomsdayers, end of the worlders. Oh my God, tech stocks or chip stocks or whatever stocks are not going up anymore. It's the end of the game. Blah blah blah. I don't buy into it. I believe in reality. And right now, these stocks are ripping. They've been ripping for a long time, and no, ripping is not a technical term. You have to understand that there's a difference. It's easy to scare anybody, just about any day of the week, whether it's the vaccine from COVID, or if the oil's going to run out, or tech stocks are not going to be, or chip stocks are not going to be good anymore, or. Eventually, it happens. A broken clock's right twice a day, right? Eventually, you might get one or two of these things happen. But I can tell you firsthand, being an optimist and being a realist is an infinitely better trade than being a pessimist. So being a realist and an optimist, not to be blinded by, oh, yeah, Moore's law doesn't matter. No, just ask yourself, okay, if any of this was true, how could chip stocks be at all-time highs? How could chip stocks be one of the strongest areas in the market? How could the NASDAQ 100 be one of the strongest indices year after year after year after year after year? So with all the naysayers out there saying that the market's going to go down, or it's the end of the game, or the end of the cycle, or so on and so forth. I remember when Apple became $1 trillion company, they said, oh, it can't get any bigger. It's now a $2 trillion company and growing. So I don't I pay attention to reality. I focus on what's in front of me. I'm optimistic. I'm also a realist. I try to stay away from the naysayers unless if there's any kind of evidence. So they talk about the vaccine for a second. Oh yeah, I've got so many people, Jeff, tell me I'm not taking the COVID vaccine. Why? Because they're going to program chips inside of you that are going to kill you and blah, 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 and the global conspiracy theory, all this nonsense. I said, okay, let me think for a second. The smartest guys I know in the world are taking the vaccine. Every single government is literally doing this for their people in the Western world. Okay, who are the ones that are not taking the vaccines? The smart money or the dumb money? I'll leave it there. So keep going.
Adam, given how important chips are to the overall U.S. and global economies, where would you say the best opportunities are where there is demand now, but there's going to be even more demand 3 months, 6 months, a year, 2 years from now?
The economy, like I mentioned earlier, from the agriculture, the industrial revolution, now to the service-based age of information, where the economy, the engine of the economy is technology. In order for you to have any scalable, sustainable business in today's day and age, just about any, you need to have a technological component. In order to do that, you need to have chip stocks or chips in there, and that benefits the chip stocks. That's the logic. If you have a Massage Envy or a Hand and Stone or a franchise, a chiropractic franchise, if you're a doctor's office, if you're a retailer like JWN, Nordstrom, or Macy's, or Kohl's, or GameStop, it doesn't matter what you are. You have a website, and you have a way for people to buy your service or your product or to book something online. That's not me. That's just the way the world is headed, and it's going to be more and more and more and more prevalent after the pandemic, so on and so forth. That being said, Jeff, if cars are now jumping on this tech bandwagon, airplanes will be, I wouldn't be surprised to see electric everything, and fill in the blank there with whatever you want. So you really have to ask yourself if this is a major macro global trend, by the way, that's evergreen. Technology is not going away. Right? This is not a fad where people are like, oh yeah, I like to wear Crocs. Remember back in 2007, Crocs were really big. And then people stopped wearing them, and then, or the pet rock for people that are older that remember, or any of these fads where they just stop. Tech is here to stay. So if tech is here to stay and it's not a fad, then as an investor, 5 years, 10 years, 20 years from now, will tech be bigger than where it is today? The answer is yes. How am I going to capitalize on that reality?
One thing that a lot of people struggle with is trying to make sense of the markets, looking for solutions. So my question here is, what kind of solutions do you provide that maybe you could tell people about?
The two big ones we have now, there's Kingmakers and then there's Alpha Trades. The Alpha Trade line, the service is two things have to happen. The stock has to cross the Alpha line, and then you get an alert. It's that simple. And Kingmakers, the idea of it is, it's again simple. You want to go after the big money, find out where the big money is buying, and buy those stocks. So I welcome everybody to join. I'd love to see you. I have weekly videos where I put up every single week to members and let them know about not only what the picks are, but I break down the market action.
Give us a couple of examples. I'd love to hear them.
Peloton, we had a gain of 178% in 24 trading days. Wow. Zoom, we had a gain of 106.75% in 23 days, or about 107% gain. I'll round them up or down. Square had six trading days. We had a gain of 167%. I'm rounding down there. Palantir, PLTR, was a stock that was given out a few months ago, right after the IPO at 10. And last I checked, it was over 30.
Well, Adam, it is great having you on. Thank you very much for coming on to Wealth Press TV.
Thank you for having me on, and I'll speak to everybody again soon.
And for all of you, make sure to watch us again, Wealth Press TV, the next edition next Wednesday at 3:15 p.m. Eastern Time. We'll see you then.